Look, when the big money starts to come on, you're right, it's already started. But as this big money starts to come on, they will move the price, and it's just not liquid enough for if they wanted to make a very quick exit, the liquidity is not necessarily there for them. So their ability to get in is proportional to their ability to get back out. From a risk perspective, they will take that stance. Now, that's kind of like, in terms of coming in with really big money, that's like some point of resistance for being the first in the room. However, you don't want to be the last guy either, because after then, everyone's already driven the price up. Now you're buying at the very, very top. You want to get in earlier rather than later, but you have this liquidity issue at the. What I'm imagining, in my mind, what I see is just, it's a Mexican standoff. Everyone's guns loaded, staring at each other. Someone's going to go, and then it's just, and then it's going to come in relatively quickly in a short amount of time. Price is going to go ballistic, and that's kind of my expectation. I don't know if that rings true for you at all.
Yeah, I mean, those of us that have been around the space for a while, we're sitting on a lot of, may or may not be sitting on a lot of Bitcoin, but, like with Armory, everybody's in this Mexican standoff and nobody's got bullets in their gun. Right. And so we released this multi-sig, free open source. We just loaded everybody's guns with bullets.
Right.
Like, come on, guys, let's have some fun. and it, the implications with borrow at 0%, something not limited in amount, Bitcoin dollar carry trade, derivative swaps, because I've been working on some derivatives deals, exchanges in that field. Kind of getting back to your Bloomberg point, yeah, we need a good pricing mechanism that regulators can feel comfortable with to base these derivative contracts off of. So I mean, there's more work besides just the multi-sig, but one of the reasons we're delaying the multi-sig, get a little bit through this correction, let the 200-day moving average catch up. Kind of what we talked about back in February. I said, $500, but absolute floor maybe $250. Here we are. It's
whatever
like
today,
bouncing around.
$450-ish or $410-ish, I think today.
Yeah, it hit $350, but
yeah.
It's like we're getting ready. The weak hands are getting shaken out. The coins are moving into much more solid hands. Wall Street. And a lot of these hedge funds, they're acquiring large blocks of coins off exchange, so you don't necessarily even see it in the markets at all. And these big blocks of coins are moving into these strong hands.
Can you explain?
It's going to move.
Why is that happening off exchange? Is it just because the liquidity
so they don't
is
move
not there?
the price?
That's why.
No, yeah, I mean, like you got this illiquid market, but I mean, like I got a friend who's kind of brokering. He's got $8 million of buys and no sells at current prices.
Right.
So I mean, like this whole idea of price discovery, I think a lot of it comes down to asymmetric information. People like Bitcoins. You can see it in the press. People, oh, it's going to be huge. Oh, it's going to be nothing. Like market's going to sift that out in the price discovery mechanism. And nobody really knows how to value Bitcoin. They have trouble even valuing gold, let alone like magic internet money. Mm-hmm. So, it's nobody really knows what this thing's worth. And now there's getting to be lots of hype around it, and Mark Andreessen talking about it, and other, people that, when they can't make a decision on their own, they rely on, other people to rely on their opinions. And you got Bill Gates and Eric Schmidt both saying it's a technological tour de force. Mark Andreessen, Chris Dixon over there saying it'd go at $100,000 a coin. I've talked about millions of dollars a coin, like plausible scenarios for that. And it's just really kind of exciting because, I mean, we're looking at it at 350 or 500 or whatever, and it's just like, this is just an asymmetric trade that is unbelievable.